welcome to this particular session. The first up we are going to discuss is about the introduction to audit. Let me take back your memories to the definition of audit, and of course, let me cover stand number 200 in this introduction segment. I hope you have watched the introduction of syllabus video. The syllabus discussion is very clear. We broke down into 3 parts and all that. So let me kickstart the first part with this very important discussion about what audit is all about. It's a very important, interesting aspect. It's going to be a simple, very quick session where we're going to discuss about what is audit, and of course we will be discussing about the breakup of standards, how they're broken down, and then we will also be discussing about standard number 200, wherein all the basics about audit, some definitions, some important definitions I'm going to discuss, of course, and all the parts of stand number 200 where all the basic concepts are discussed. We will be discussing that also. So let's start discussing, guys. First up, right, you see there, talk about auditing, and as defined as per ICAI. You know this, I don't really have to emphasize so much here, but let me anyways take you through this. What is audit? Audit is an independent examination. Audit is a independent examination of financial information. Audit is a independent examination of financial information of an entity. What kind of an entity are we talking about? Any entity, right? An entity, whether profit making or not, irrespective of its size, whether profit oriented or not, irrespective of its size or legal form, irrespective of its size or legal form. When such an examination is conducted with a view to express an opinion thereon. Okay, so there are 4 parts to the definition. Always remember, definitions never be by hearted. What we need to do is to understand the definition. How do we do that? Is by trying to break down and see. In English language there are very few questions: what, why, when, who, where, how. So ask those questions, get the answers for them, join all of those. It makes it a very meaningful definition. How is it all about in audit? The first question that we are asking is what? What is audit? Okay, start with the question of what is audit? What is audit? What is the independent examination? Okay, very good. Now, if I put a full stop there, will that suffice the definition? Audit is an independent examination? No, it is not going to be done. Audit is an independent examination. You cannot stop the discussion there. Of what? Everybody's basic next question is like, independent examination of what? Independent examination of financial information. Whose financial information? Your financial information? My financial information? Whose financial information? Who? The question is about whose financial information? Entity. I'm going to discuss this word entity. What do you mean by an entity? Are you talking about a company? Are you talking about a company, or are you talking about a sole proprietor? Are you talking about a partnership firm? What are you talking about? So it's very important to try and understand what we are talking here. We need to understand entity can be any of those. That's why I'm using the entity is an umbrella term, covers everything. I'm not talking about out of a company, out of a partnership firm. I'm not being pinpointed on any of those. I'm talking about all of them in general, right? What is an independent examination of financial information of an entity, whether profit oriented or not, and irrespective of its size or legal form. It could be a small, medium, large company, whatever you classify them, right? Micro, small, medium, whatever classification you call. When such an examination is conducted with a view to express an opinion thereon. What opinion are you expressing is a question. Okay, we will come to each of those points. Now let me start discussing one by one here. What is audit? So that's all, you got to join these 4 points. What is audit? Independent examination. Of what? Financial information. Of whom? An entity. Why? To express opinion. That's it. Join all these, that's what makes the definition of audit, right? Audit is an independent examination. What do you mean by the term independent? Independence is about not being subordinate. Not being subordinate to the wish or will of others. Not being subordinate to wish or will of others. Not being subordinate to the wish or will of others. Understood? That's the thing. when you are free from anybody's clutches, that means you are expressing a completely independent opinion. You are not dependent on anybody. You are giving something of your own. That is what is called not being subordinate to the wish or will of others. Then talk about financial information. Now, why did I say independent examination of financial statements? Now, when I say financial statements, I am talking only about balance sheet, P&L, cash flow, notes, only those documents. But here, when I say financial information, then I'm restricted to only checking those. So it's not only those, right? Financial information is nothing but financial statements plus all the books, papers, vouchers, all of it, anything, agreements, contracts, right? Agreements, contracts, whatever are essential for you to conduct the audit, all of that are called financial information. That's a very wide term. Okay, covers everything. So if I say independent examination of financial statements, it covers only those four documents. So we are not just seeing those four documents and expressing opinion, right? We're talking about checking all these. That's why we use the word financial information. Audit is a independent examination of financial information of any entity. When I say the word entity, it could be what? Sole proprietor, partnership, company, trust, society, you name it, we have all of it. Okay, so all these are all called entities, small or big, anything, irrespective of its size or any legal form. Okay, so that's what we are talking about. These keywords you need to understand. What is an independent examination, which means you're not subordinate to the wish or will of the others. Or financial information, which is talking about financial statement, books, papers, vouchers, all of those contracts, agreements, everything. And then we talk about irrespective of its size or legal form, and when such an examination is conducted with a view to expressing a opinion thereon, that's the point. So we got to talk about all these in such case. Everybody, are you clear at this point? The last but most important part of the definition is what? Expressing an opinion. What kind of an opinion are you talking about? We're talking about expressing a true and fair opinion on the financial statements. You're talking about expressing what? A true and fair opinion. Whether the financial statements are true and fair. Okay, you also have a discussion, you discuss in IPCC or Inter that it is not true and correct, right? Because the very nature of financial reporting, now you have 4 inherent limitations which I'm going to cover in slide number 200. So you need to understand that it is impossible for us to exactly or pinpointedly talk about it, and that's one of the reasons why we cannot say true and correct. We'll only be saying true and fair, which is the point. Understood? So that's the case. This is what is the definition of what audit is all about. Audit is the independent examination of financial information of an entity when such an examination you're conducting to express a true and fair opinion. That's it. It's a very important part of the discussion, guys. This is what we are going to discuss in the entire syllabus on how to do auditing. So this is what auditing is all about. How to do auditing is what we're going to discuss throughout. The main objective of auditing is to express an opinion. How do you express an opinion? Is only by setting yourself up to the standards. You will be looking at the standards, and then based on the standards we will be going ahead and discussing all standards, and that will help us in telling the way in which you have to conduct the audit. Clear? So on that note, let's go ahead and let's kickstart in understanding how these standards are broken down. Standards here are very simple. Guys, we have 5 types of standards and all, right? There's somebody who's called as the Audit and Assurance Standard Board, AASB, which is the wing of ICAI, which issues standards. So they issue standards, and they've issued 5 types of standards serving for all purposes. Okay, so the categorizations as part of CA final syllabus, we have all these standards. As part of the CA inter syllabus, you must have studied only about the standards on auditing, right? So we will be talking about all those. We have 5 different types of standards. Standards on auditing, exclusively meant for audits. We're talking about review engagements. What are review engagements? Here the entire objective of the auditor is not to make a audit. You're only appointed for the purpose of doing a review. That's all. And then if you are given a specific task of fulfilling only about giving an opinion on a particular aspect, or maybe like an internal aspect, then it will be an assurance engagement. 3 standards are there over there that will help you deal with it. Related services. Now sometimes chartered accountants are also involved in rendering services like accounting. So we are providing some accounting services, or we are preparing financial statements of the entity, all that. And then of course there's one standard on quality control that is also discussed here. So we have 2 standards here, we have 3 here, 2 of those and 1 quality control standard. So we have 8 standards which are other than standards of auditing. And then of course we have from standard number 100 to 899 we have 38 standards in all, right? So totally now you have 46 standards from the institute covering various aspects. First, primarily let's focus on standards on auditing. We will be discussing each of them, SREs, SIEs, SRS later. So right now standards, I'm going to give you a breakup of what the standards look like. So standards from 100 to 199 are all introductory matters. Basic principles governing the audit is the 2 series. There are 9 standards in the 2 series. We're talking about what is audit all about: introduction, engagement, complying with laws and regulations. How do you, your main objective is to express an opinion and not to go and find out frauds. What is the concept of professional skepticism? All these are discussed in the basic standards from 200 to 299. Then one of the most important series in the exam is the 3 series, where 4 standards are there in the 3 series and 2 standards are there in the 4 series. 3 series we have 300, 315, 330 and 320, all about planning. This level is about audit planning and risk assessment, which is 300 will be on planning, 315, 330 is about risk assessment and responses to risk assessed, and 330 is about risk assessment responses, and 320 is on audit materiality. 2 standards in the 4 series, 402 and 450. And then one very important segment in this is the 11 standards that are there in the 5 series. 5 series being one of the most asked and most important series, because ultimately the auditor gets satisfied only when he has proper audit evidence. So how to collect sufficient and appropriate audit evidence, that is what the 5 series discussion is all about. You have to see even that. 3 standards are there in the 6 series, 600, 610 and 620, which tell us that sometimes it's important that we can rely on the work performed by others, like in case of other auditors, internal auditors or experts, we can rely on their work. So that also has been picked up. And then there are 6 standards on reporting: 700, 705, 706 and 701, the latest inclusion. That plus 710 and 720, the 2 standards on comparative information and other information, both those are also talked about. 3 standards are there: 800, 805 and 810 on special considerations. These are not used for all audits. They are used only for special circumstances. What are those? Will be mentioned in that only. So in all, these totals up to 38 standards, and all of which are part of our syllabus. So we will be discussing all of them. In the first chapter, we are picking up the discussion from 200, and of course in the first and second chapters, by the time, and even the third, risk assessment and internal control, we will be covering all these standards. Then only the 7th chapter of your syllabus we are covering 8 series, and of course these standards here. So all these 8 standards plus, so these 8 plus the 3 here, these ones, they all are covered in chapter number 7, right? Special aspects they are considered. Rest of it is all going to be covered in 1, 1.1, 2, 2.1 up till unit 3. All these standards are going to be covered. That's the idea. So that's what are the breakup of standards. So you have the Audit and Assurance Standard Board of the ICAI issuing 5 different types of standards: standards on auditing, standards on review engagement, standards on assurance engagement, standards on related services, and standards on quality control. And then of course the standards on auditing are broken down in this fashion. Let's get to one of the most important points here again are the 8 steps involved in an audit process, which is what we're going to do in the whole of your module 1. We are discussing this only. So everybody focus on the 8 steps involved in audit. First and foremost thing, you should start doing the audit work by picking up the audit engagement. The first and foremost step is called engagement of the auditor, which is discussed in 210. So these 8 steps in detail, right, all these 8 steps in detail along with channel number 210 is discussed in the next video completely. So from there on you will kickstart and discuss everything. So right now I'm just going to take you through the 8 steps. These 8 steps are explained in clear detail along with channel number 210 in our next segment. So first you take up the audit, that is the engagement of the auditor. Then once you are the auditor for the client, you need to obtain sufficient knowledge to plan, perform and do. So therefore, obtain knowledge of the client business is your second step. Standard number 315 part 1 will help you. There are 3 parts to the standard. So standard number 315 part 1 will help you in understanding that. Formulation of an audit program, step number 3, audit planning, standard number 300 will help you with that. And determining the NTE. Now these 3 words are very, very important. NTE stand for what? Nature, timing, and extent. Nature, timing and extent are very, very, very important aspects. You got to talk about these. So determining NTE of audit procedures, that is standard number 315 and 330 are talking about it. We will discuss them in detail in later part. How do you perform substantive procedures? What is the aspect of performing substantive procedures? And all these 14 standards here from standard number 500 to 620, all of those needed for our discussions are all there. Then without documenting all this, you cannot close the audit. So whatever we have collected during the course of the audit, whatever is the audit evidence, that has to be documented. And then standard number 230 will help you in telling what to document, how to document and how long you have to retain the documentation. All that is discussed in 230. And last but the most important part of audit is expressing an opinion. So 2 aspects, forming and reporting. 700, 705, 706 and I'm also adding 701 here. That's the latest inclusion. So all these 8 steps are important in performing. Though you see 7, the last step is about formulating and expressing. There are 2 aspects. Formulation is in mind and putting it in the form of a report is the other part of the story. Okay, so the 8 steps involved in doing the audit. We'll be explaining all the 8 steps in detail and also be covering standard number 200 in our next video. Right now let's get to understand some of the basic terms and understand some of the basic points in standard number 200. Standard number 200 talks about conduct of audit in accordance with the standards and auditing. Tomorrow somebody comes and questions you, "Look boss, who told you to do audit in accordance with standards? You can do audit in a way you like." No, I cannot do audit in whatever way I like. I should do audit in accordance with the standards and auditing. It's an important fact. So we have to all now understand within what parameters we have to conduct the audit, why are we doing the audit, purpose of the audit, within what parameters you have to do the audit, scope, reasonable assurance, a very important term here. I'm going to explain that shortly. What are the inherent limitations in audit? Auditor can never be able to give a very, very comfortable opinion. You have a chapter later called investigation where you will be giving a conclusive opinion. But here in audit, our audit evidences based on what we collect, we can only give a reasonable assurance. We cannot give an absolute assurance. You know all this. And of course, responsibilities of the auditor. What are we supposed to do as auditors? Fairly simple standard, guys. All about some introduction. Let me take you through a couple of important definitions and then we'll push off to the standard, seeing what the content is and what are the important aspects. So first and foremost thing, we are discussing the purpose and scope of the audit. Obviously, what is the purpose of audit? Audit, if you do and give the opinion, what are you achieving? You will get your fees and go, but why are you doing the audit? So that somebody who is using the financial statements, right, they feel confident that yes, a third party, independent third party has conducted audit and they have expressed their opinions, makes sense, something like that, right? What is the purpose of an audit? It gives a confidence to the users, instilling confidence. That is only called assurance. Assurance. That is why your CA IPCC or inter syllabus is titled as auditing and assurance. At that point, assurance about instilling that confidence to the users of financial statements regarding their reliability. Understood? Auditor expresses opinion on whether the financial statements are true and fair, showing true and fair view in accordance with the applicable financial reporting framework. Whatever financial reporting framework is applicable to you, keep that word on hold. Of course, I believe most of you know it, but still in a minute we will go to what is financial reporting framework, FRF as it is called in short. You will see that in a lot of places, coming up in different places. FRF means what? Financial reporting framework. So why do you do the audit? The purpose of an audit is to what? Enhance the credibility. Enhance the credibility of the financial statements. Enhance the credibility of financial statements. That's the point. And then talking about scope of the audit. Please understand, we are not future tellers or astrologers. We are only auditors. What we will be doing is giving an opinion on the financial statements for which the transactions are already over, for which the entire aspect has already been taken care. So please don't be under the impression that if we give a true and fair opinion, the company is going to do fantastic for the next 5 years. No, please understand, we are not astrologers or future tellers. We are only based on the current situation and evidence available to us. We are presenting an opinion. That's all. The auditor's opinion, underline, does not give any assurance on the future viability. Pick up the standard here. Underline, the auditor's opinion does not give any assurance on the future viability or efficiency or effectiveness of the company. We are no way guaranteeing any future. Understood? The auditor has to check whether the financial statement comply with the FRF. We are going to look at that. And audit is to be conducted in compliance with laws and regulations. Undoubtedly, you have to comply with all the laws and regulations. Law is the most superior. So when you talk about scope of the audit, no, first thing that comes is law, the most superior thing. Then follows standards on auditing. Then you will follow the terms of engagement that you enter to the client. So law and regulation the most superior, followed by standards. Standards cannot overrule laws or regulations. Understood? And so is your case, terms. You cannot write something in the terms which is completely over and above the law or over and above standards. You cannot do that. Understood? So that is the purpose and scope of the audit. Okay, like I told you, the third part is talking about reasonable assurance. Reasonable assurance and inherent limitations. We are coming back to this in a minute after we learn a couple of definitions. Okay, talk about this. What is FRF or what is the applicable financial reporting framework? Now, please understand, you can prepare a T-shaped balance sheet and pretty much if you follow the double entry system, everything is going to tally and give a very nice picture. Now, as a matter of fact, what you need to understand is, it is going to give a picture, all that is fine. Now, for a company, if you prepare a T-shaped balance sheet, is it okay? Will it tally? Will it tally? Yes, absolutely it will tally, unless otherwise you make any mistake in preparing it. But why can't we prepare a T-shaped balance sheet and submit? Because the Companies Act says that for companies, you have to present the balance sheet and P&L in accordance with the Schedule 3 of the Companies Act 2013. Now, if nowhere it is told in the Companies Act that you have to prepare according to Schedule 3, then comfortably you can prepare a T-shape. Now, sole proprietor is there, partnership is there, they are preparing T-shape only. But nobody told them to follow a particular aspect. Understood? That is the case. What is your reporting framework? A reporting framework, any reporting framework, a T-shaped balance sheet also, you can comply your requirements of double entry system in that. But as a matter of fact, what you need to understand here is that what is your applicable FRF? Whose responsibility it is to prepare? The management of the entity should take up the responsibility and prepare it, in the applicable financial reporting framework. You see that the financial reporting framework adopted by management and where appropriate, those charged with governance. Who are these two people? Management and TCWG. Please go to the couple of definitions we are talking about management. Who are management? the persons with executive responsibility. These are people with executive responsibility to conduct entities operation, day-to-day entities operations. Whoever are conducting, those people only are called as management. And who are those charged with governance? These people are given a responsibility for overseeing the strategic direction of the entity. There are people one step above the management. Like say, if there is a chief minister for a particular state, takes care of day-to-day affairs, is involved in doing all of them. Now, there is somebody called governor. What does he do? Appointing the chief minister. If the chief minister wants to resign, all those. Like he is somebody who is overseeing, a monitoring authority. Management is somebody involved in day-to-day affairs. Well, TCWG, you will hear a lot about them. These are people one step above the management, having a responsibility to oversee what is going on. Right? That's the main part of the story. Then we will come back to reasonable assurance and professional skepticism. Let's go continue our definition on applicable financial reporting framework. So, financial reporting framework adopted by management or where applicable at TCWG when in preparation and presentation of financial statements that should be acceptable in view of the nature of the entity, the objective of financial statements which is required by law or regulation. Schedule 3 format is required by law or regulation for company. Now you cannot follow Schedule 3 because you cannot follow Schedule 3 for a bank because Banking Regulation Act has a different format. Okay, so is the case for IRDA. So is the case in electricity companies. You cannot follow the Schedule 3. Sir, they are also companies, correct, but they have exclusive laws guiding them. So if there is an exclusive or a specific law, that will always overrule the general law. So other companies, they will be preparing in all Schedule 3. Banking companies will prepare in accordance with Banking Regulation Act. Like that, if an entity is preparing in accordance with what is told to them, then that is what we are calling it as what? An applicable financial reporting framework. Now, if, sir, I won't present it in that format. No, if you don't present it in that format, the problem is, how can I express an opinion saying it is true and fair? Maybe the numbers are true, but what is the concept of fairness? How can I say it is fair presentation? It is not a fair presentation. If I prepare a T-shaped balance sheet for a company, it tallies and it is giving me a perfect picture, is good. But that's not what the law says, no? So I cannot go ahead and guarantee saying you that yes, this is presenting a fair view. It is giving a true picture. It's not fair. So that is exactly why we have something to deal with fair presentation framework. The term fair presentation framework, underline, is used to refer an FRF that requires compliance with the requirements of and the framework. Whose responsibility it is? Compliance with the requirements of the framework and acknowledges explicitly or implicitly to achieve a fair presentation. Sir, why are we preparing financial statements in the Schedule 3 format and not T-shape? Because the law requires. And as you have to follow what the law requires, that is when it is called fair presentation. It acknowledges explicitly or implicitly that to achieve fair presentation of the financial statements, it may be necessary for management to provide disclosures beyond those that are specifically required by the framework. Whatever they are talking in the framework, beyond that, there is some need, you have to disclose that also. And it is a responsibility of management. They should acknowledge. What should they acknowledge? Acknowledge explicitly that it may be necessary for management to depart from a requirement of the framework. Sometimes it so happens that if you follow the framework as it is, you may not be able to achieve the true and fair presentation. So therefore, sometimes what we do is to kind of deviate from that. So it acknowledges explicitly that it may be necessary for management to depart from a requirement. Now, departing from a requirement is not a crime. All that you need to do is to give a disclosure for that. Okay? Acknowledges explicitly that it may be necessary for management to depart from a requirement of the framework to achieve a fair presentation of the financial statements. And such departures are expected to be necessary only in extremely rare circumstances. You also keep in mind extremely rare circumstances. Okay? If they are acknowledging that they will do this to achieve fair presentation and to acknowledge explicitly depart requirement, both these are some of the important facts that we need to consider for applicable FRF. And then if these acknowledgements are not there, the term compliance framework is used to refer to a financial reporting framework that requires compliance with the requirements of framework but does not contain any acknowledgements in one end. So if you're preparing a T-share balance sheet, that's part of the compliance framework. Nobody is giving any acknowledgement there that they will fulfill this, will achieve a fair presentation. So if you're using any framework which is not recommended by any law or regulation, and there's no obligation for you to follow, and you don't acknowledge the fact, then that is a compliance framework. Okay, so that is what FRF is all about, financial reporting framework. And then we have something called as fair presentation framework, and then we also have something called as compliance framework. So this is what the whole story is about. Got it? That's the case. So as you know, what is fair presentation framework and compliance framework? Well, let's get back here to talk about this particular point that we moved on from. How do you obtain a reasonable assurance? Now, going ahead once again, taking up the definition of what reasonable assurance is. In the context of audit of financial statements, it is a very high but not absolute level of assurance. Reasonable. See, we are not doing an investigation. Police do investigation, or like say there's a murder. Police do murder investigation. Nobody does murder audit, right? Murder investigation happens. Why? Because there you cannot be like, right, first hang him, we will see later who is done what. You cannot do like that, right? What you should do is, you need to obtain conclusive evidences. Yes, this is the culprit, this is the one who did this mistake. You need to charge him only after you have sufficient, appropriate, establishable evidence. Then only the judge in the court will agree for it. Otherwise he won't. Understood? But in audit it's not like that. If you fairly are able to construct with reasonable assurance that yes, the financial statements are giving a true and fair picture, we can go ahead with that. So that is the point here. So taking back to that, you need to understand that we can only obtain a reasonable assurance whether financial statements are free from any kind of material misstatements which may arise due to either fraud or error. Misstatements arise because of two reasons. One is completely unintentional, that is called as error. The other one is absolutely intentional, that is called as fraud. Okay, that's the thing. Reasonable assurance has some inherent limitations. Most of the audit evidences are persuasive rather than being conclusive. I told you, right? Just now. Conclusive evidence are required in investigation, not in audit. Okay, in audit we are only looking at persuasive evidence. More persuasive evidence you obtain. Persuade means to go further. So if you do more work, you will be going on able to obtain more and more evidence. Understood? If the auditor obtains sufficient and appropriate audit evidence, I will discuss these two terms as part of SA 500. So for now, sufficient means enough, appropriateness is the right audit evidence. Sufficiency refers to the quantum, appropriateness refers to quality. We will discuss these terms in detail in the stand number 500. If auditor obtains sufficient appropriate audit evidence, then it may be useful to reduce audit risk to an acceptably low level. It may be useful to reduce the audit risk to an acceptably low level. You can never bring audit risk to zero. Please understand this. The concept of audit risk becoming zero, right? This concept does not exist. Audit risk can be only brought down to a acceptably low level. Okay, why acceptably low level? The word acceptable means what? What is acceptable to you? Okay, that is the concentration here. We're not talking more or less. Acceptable to you. Inherent limitations of audit. Like I just discussed, there are 4 inherent limitations to audit, because of which you can never be able to give a true and correct opinion. The very nature of financial reporting, is like that. The nature of audit procedures, you cannot perform 100% audit procedures. The nature of financial reporting, if you see here, judgments and estimates are involved. If you talk about audit procedures, sampling is involved. Okay, so you cannot get a 100% assurance. And then the need for audit to be conducted within a reasonable period. There is nothing but limitations with respect to time and cost. Because we have some limitations with respect to time and cost, we may not be able to cover all the areas. But please understand, time and cost should not be given as excuses for not complying something. Got it? So limitations with respect to time and cost are also factors which may not allow you to do complete audit. Right, moving further, we're talking about the last definition here, the concept of professional skepticism. Guys, please understand, we are not fraud hunters. At the same time, you cannot accept everything what the client gives you, because they can fool you around also. So what is the next best thing that we can do is to have a questioning mind and stay alert to the conditions. If there is an indicator that something is going wrong, then stay alert. Okay, if one evidence is reflecting that this can be wrong, then you build that into other areas, see whether other evidence are also wrong, so you can think about something like that and go. The concept of being alert to conditions, having a questioning mind, that's what is called a professional skepticism. What is professional skepticism? It's an attitude of having a questioning mind, one, and being alert to conditions which may indicate, I'm not telling that pakka misstatement is there, you have to check this, I'm not saying that, right, which may indicate possible misstatement due to fraud or error, which is obviously requiring you to do a critical assessment of the audit evidence. What is the concept of professional skepticism, guys? Right, professional skepticism is all about two things. What? Having a questioning mind. Underline these two words and mark 1 and 2 about that. Right, 1 questioning mind, 2 being alert. I marked it, see there and mark it. Having a questioning mind, and professional skepticism 2 is about being alert. For what? Being alert during the course of the audit, being alert to conditions, so that you can see indicative of any material misstatement if it is. Got it? That's the point. Alright, let's go on to the last part of the discussion in the standard, which is about responsibility of the auditor. I can comfortably run through these. I believe you know all these, so we can run through this. Responsibility of the auditor with respect to ethical requirements. What are we talking about? Ethical requirements. Integrity, which means being honest, straightforward and sincere. Auditor's responsibility is to comply with the Chartered Accountants Act 1949, follow the code of ethics. Be objective in your approach, that is being unbiased, not tilting onto any side, be unbiased. Professional competence, auditor needs to be a chartered accountant qualification. While doing the audit work, be careful. And most important part of standard number 200 is talking about the rule of confidentiality. What is the rule of confidentiality? Whatever information you are getting to know during the course of the audit, that you should not go and tell everybody, I found this in that audit, I have exposure to this, my client does this. No, keep your mouth absolutely sealed. The auditor is not supposed to disclose any client information to any third party. You're not supposed to do that. But you cannot do the same things, you cannot act funny in front of a regulatory authority. Some regulatory authority who is having power under law is questioning you. There you should not play games. There you can't go and tell, hello, I can't tell rule of confidentiality. Because if law or regulation is requiring something, that's the most superior thing in the country. So you have to obey that. And if the client himself is permitting, whose information it is? Clients. They themselves are permitted. What is your problem? So please understand the rule of confidentiality. Rule of confidentiality. It talks about the auditor is not supposed to disclose, right? Not disclose any information to a third party, right? You're not supposed to disclose any information to a third party unless, 2 points are there here, unless is obtained the client's approval in writing. The client has permitted you in writing, or there is a legal duty disclosed, and in this goes unless permitted by client, and then it's required by law. In both these cases, you can comfortably go ahead and disclose information. Otherwise, keep your mouth absolutely sealed. Understood? Okay, what is the responsibility of auditor? Number 2, professional judgment. Okay, here it's a very important thing that you take care, that it is important to take proper decisions. It's not like how you sometimes buy any goods, like sometimes you want a phone, First you're telling this model, then you're telling that model, then you're like, no, this model is not fast, I'll go with that model. The RAM capacity is more, here the hard disk capacity is more. You're juggling your thoughts like hell. You cannot do that in audit. Auditor has to be firm about a particular thing. You take judgments and be firm about it, right? It is important to take proper decisions while performing an audit. It refers to application of relevant training, knowledge and experience. All the training that you had, all your knowledge and experience. These are very important things that you need to put up. Obtained in the field of accounts audit law to make informed decisions, right? Firm judgment is very much important. You cannot be somebody who's making wavering judgments. So no excuse about it. You got to make a firm judgment. That is the point here in professional judgment. Point number 2. Like I just discussed the concept professional skepticism. What is the concept of professional skepticism? 2 things. It's an attitude of having a questioning mind. That is point 1. And critical assessment of situations. And 2. You are about to be alert to conditions. So audit evidence you obtained, you went and asked something to an employee, he gave you a reply, then you picked up a document that is showing something else. Conflicting audit evidences. What you got from that employee and what you are seeing here are quite different. In such a case, you might want to drill more and check more, right? Being alert to audit evidence from one source is contradictory. What do you mean by contradictory? Not matching to another source, and thereby questioning their reliability. If this document is wrong, how many more documents like these are wrong? So you might want to question about all of those. And identify the area in which there is a possibility of occurrence of a fraud. These are called as fraud risk factors. What are they called as? Fraud risk factors. Areas in which there could possibly be a fraud, possibility of fraud are called fraud risk factors. And if the situation demands, the auditor can go for additional audit procedures. We might want to imply some kind of additional audit procedures. See. And finally, if the auditor feels that either the management or TCWG are giving wrong or incorrect information, fooling around with you, they're giving you wrong or incorrect information, then the auditor can go further and do further audit procedures. You don't have to completely depend on what they're giving. You can comfortably do some further audit procedures. But please understand, every document they give, you should not immediately doubt, hey, they could have given wrong document. As long as you believe that it is valid, you can accept it, right? Auditor can accept records and documents. Auditor can accept records and documents as genuine unless there are any contrary reasons. If you have some contrary reasons, go for it. Otherwise, absolutely fine. You can go ahead and accept those documents. Don't doubt them unreasonably. At the same time, don't have an open mind for everything and accept everything. That is the concept of professional skepticism. Have a questioning mind. Be alert to conditions. Alright, audit evidence. Like I told you, audit evidence, we have to obtain sufficient, appropriate. Two words. Sufficiency refers to what? So here I am putting up sufficiency refers to quantity. That is the quantum of audit evidence, while appropriateness refers to the quality of audit evidence. We will discuss in detail these 2 terms in stand number 500. So you have to, as an auditor, obtain sufficient appropriate audit evidence. So why are you obtaining sufficient appropriate audit evidence? To reduce audit risk to an acceptably low level. To reduce risk to an acceptably low level. You cannot make it 0. We already discussed the definition of audit risk and brought it down only to an acceptably low level, and thereby enable the auditor to draw reasonable conclusions. Enable the auditor to draw reasonable conclusion on which to base the auditor's opinion. Which the auditor's opinion is based upon. You have to obtain sufficient amount of audit evidence. So that tomorrow if somebody is saying, how the hell did you come to this conclusion? This will be your ultimating. Understood? The auditor cannot expect that audit risk may reduce to 0. It is not possible. 0 is not possible. Remember that. Understood? That's the point. So we talked about professional judgment, professional skepticism, audit evidence, audit risk, and most importantly, it is very important for you to conduct the audit in accordance with standards. Stand number 200 prescribes you to conduct the audit in accordance with all the other standards. So be very clear about it. The auditor shall comply with all standards are relevant to the audit. The auditor shall have an understanding. The auditor shall have an understanding of the entire text of standards in auditing. Right, starting the next video, full of standards are there. You will have a complete idea of that. Not represent compliance with standards in the auditor's report unless you do it. Right, without complying with standards, simply just for the heck of writing, you should not write in the audit report, we complied with standard. Don't do that. Understood? You have to comply. If an objective of a relevant standard cannot be achieved, underline cannot be achieved, the auditor shall evaluate whether, if that is not allowing you to do something in the standard, then is it restricting the scope? Will you still be able to give the opinion? All these are important questions. If an objective in a relevant standard cannot be achieved, the auditor shall evaluate whether this prevents the auditor, from achieving the overall objectives of the auditor, and thereby it requires the auditor, in accordance with standards, to modify the opinion. I will discuss this modify part in the 7th series. Right, so modifications are discussed in essay 705. When we go there, we'll see. When you cannot issue true and fair, then you will issue a modified opinion. We will see that there. And if you are not able to do that also, withdraw from the audit engagement, you resign and go from the audit engagement, rather than giving wrong opinions and rather than giving an opinion which you are not comfortable with. It's always better to resign and go. Understood? So that's it. That's what we have in this fairly simple standard, guys. Standard number 200, which is a very basic standard that we've been talking about here in this segment. So yeah, that's it. That's what we have in this segment, discussing about the definition of audit, different types of standards, the breakup of standards, and the 8 steps involved in doing the audit, and of course standard number 200, which tells you to comply with all the other standards while doing the audit. The next video is all about the brief of the 8 steps, the entire audit procedure, and standard number 210 to kickstart. So you can listen to all the 8 steps, note down all of them, 8 steps performing the audit, and of course catch up with standard number 210 in the next video.